All right. In the interest of time, we're going to go ahead and get started. Please feel free to come in, grab a seat. Thank you for joining us for this panel, The Quest for Yield, Opportunities in Staking and Beyond. I'm Sophia Shluger. I'm the founder of Theia Global Advisors, a crypto consultancy based here in the UK, focused on business development and fundraising. More recently, I've been working in the RWA space at PVO1 as Chief Commercial Officer, putting bonds onto blockchain. And previous to that, I was the Managing Director for Amber Group, in charge of institutional business development here. I'd love to start by asking my esteemed panelists for a quick introduction. Go ahead.
Hi there, I'm Siam. We are a baby crypto hedge fund. We only got our license in September. So yeah, we're a discretionary long-short crypto.
Hi there, I'm Duncan from 21 Shares. I guess we're the old kid on the block. We started in 2018. We're the leading provider of crypto ETPs. So we have $10 billion under management and about 50 plus products in the market today.
Thank you. Hi, everyone. My name is Eva Lawrence. I am head of EMEA for Figment. We are the largest independent staking provider, working with asset managers, exchanges, banks, custodians, to help them offer staking services to their customers.
Great, thanks for the introductions. So getting started, the first question I'd love to ask is, what's new on the product front at each of your respective institutions?
We don't offer any staking products. I guess I'll hand this over to Duncan and Eva.
Well, I guess we're always looking at new products. We have a pretty active pipeline. Probably main thing to note is we launched our lower cost access route to Solana, I think only last week. So we have a now cheaper fee in the product in the market, which is also a staking product.
So as we're focused on helping companies like 21 Shares to offer staking, our new product offerings have been around integration. So we have various new options in terms of APIs for connectivity to then offer staking services or to provide rewards reporting to end customers. Also, we have click-to-stake functionality and are continually adding new networks available via click-to-stake through our platform. And then finally, we have a staking widget, which enables, say, an exchange to embed staking functionality within their platform with low or no code. So for us, it's been about new product accessibility to staking.
Great, thank you. Maybe we'll just take a quick step back. Maybe, Eva, could you share with the audience, please, what is the difference between yield products and staking products which earn rewards? Could you talk about that a bit?
Yeah, sure. So I mean, staking and staking rewards are not yield. So we almost maybe want to rename this the quest for rewards. It's an important distinction because staking is not an investment product, and the rewards that are generated by the protocol are done so for securing the network. They are not determined by Figment or by 21 Shares or by anyone else except for the protocol. You can look at ways to optimize rewards, and that's why you look for an experienced staking provider, but you can't, you're not generating a number from thin air. I'm not sitting there and thinking, okay, well, I'm going to give this customer X in APY, or I'm going to give this customer Y. It is determined by the protocol, and it's a function of the protocol. So I think that's really important to remember when we're talking about rewards and we're talking about yield, that staking is not an investment product, and so there is no yield. It's also the key differentiator from lending. Staking is not lending. You're not passing the title of the assets to a staking provider, to a custodian. And so for that reason, there's no yield on the loan. So I think that that's really important to differentiate, because obviously the risk profiles are also different.
Yeah, I think that thing about providing a service to the network is often forgotten as well. So most people don't realize that you're actually doing a job by staking. That's not to say that there aren't interesting opportunities, yield opportunities in crypto, but they do exist in lending, in providing liquidity to DEXs, things like that.
And typically, for yield in crypto, it's when you're actively playing around with liquidity pools, so like yield farming and whatnot. Yeah.
Great, thank you. We've heard it before, the institutions are coming, and we've seen that in different segments within the blockchain industry, obviously RWA's tokenization, where I've worked previously. So tell us, please, where are you seeing the increased interest from institutions? And if you could be specific, that would be great.
Yeah, so we have seen an increase from institutions, and when I say institutions, I'm talking very large regulated entities here, and an increased interest in Solana in particular over the last 6 to 12 months. We have seen them not only look at Ethereum, which we had in the past, right, for the larger, say, bank-grade institutions, they perhaps looked at Bitcoin and ETH, and that was it. That was where it finished and stopped. That's where the world of crypto ended for them. So in the last 6 to 12 months, we've seen those types of institutions have more of an interest in Solana. We can get into why later, perhaps, but that is something that has been encouraging, right? That they realize there is more to crypto than just Bitcoin or ETH or just Bitcoin. So I'd say that's promising for them reviewing the industry as a whole, and as we grow and mature, it's a good signal.
Yeah, for us, at the kind of top end, those big institutions, the pension funds, sovereigns, it's definitely more on the like BTC and ETH, because most of them are just starting to think about their allocation as part of an SAA or a TAA. But we do have some corporate clients as well who are looking at more opportunities, a wider range of products, and then the basis trade has been quite popular as well. So like the long ETP or ETF short future that has been quite popular with hedge funds, we would still bucket them into the institutional category. And I think that's quite interesting because ETPs were really created as like an easy access to crypto. So they weren't necessarily thought of initially as a sophisticated way of doing it. It was just an easy way to do it. So you didn't have to go through a crypto like platform, onboard service providers. And now you're actually getting much more interesting opportunities with the ETPs. Some of the most sophisticated investors in the world are using them.
With institutions, there's a bit of a job risk element. So if they're moving into an ecosystem, they want to go into the biggest, which is why a lot have flowed into Ethereum and a bit of Solana. Because if they were to go into any others and things were to go tits up, they're next on the line. And there are much better protocols out there. I mean, Ethereum and Solana are still pretty shit. Solana breaks all the time. Ethereum is slow and expensive. But what we are seeing is that, I wouldn't say these are institutions, but there are a lot of big VCs out there now, all collaborating, creating their own new chain and going, right, let's do this one. So SUI is an example, or Internet Computer. Again, both of them are still pretty pants, but sharks are forming.
Very good. So let's dive a bit deeper on the reward side, which you had started to speak on. Why have we seen an increase in rewards on Solana in the past 12 months?
Memes. That's pretty much it.
Anyone else want to add to that?
I think that's one factor.
Yeah.
And of course, you've got increased activity on trading clients like Pump.Fun, right? This is not an endorsement of Pump.Fun. But yes, you have seen memes and an increase of activity there. You have also seen an increase in demand for block space. You have also seen an increase in transaction volume. And what that has led to is an increase in maximum extractable value on Solana. You see that Jito, running its MEV client, has had an increase in demand. And what we've seen for the MEV portion of rewards is it's gone from 0.01% of the total rewards to around 3.5% in the last year. So that portion of of MEV-related rewards has significantly increased. So it obviously depends, which staking provider you're using as to what types of rewards you'll get and how they are running validators. But at Figment, we've seen the rewards increase in the last 6 to 8 months from 7% to around almost 12 now. That is a big increase, right? And it's driven by increased transaction volume, more demand for block space, and hashtag memes.
Yeah, I'll just add something. I mean, it's quite timely because I think we just put out on our latest newsletter. If you go onto our website and pick it up, I think we cover this exact topic of Solana versus Ethereum, and for sure, there's been a lot of recent activity, but everybody knows Solana is a marketing machine, right? And there's this constant battle for developers, for talent, the same thing as we've seen in the traditional tech industry as well. And they've just done a good job of bringing people over from Ethereum or EVM compatible chains, I would say. I'm on the board of another L1, and we've talked about this all the time, as well as how do we win developers over from other chains and from the Web2 community as well. And I think Solana's just done a really good job. If you look at the MEV, you can see Ethereum MEV coming down over time, but it's more noticeable as Solana's is picking up.
When you've got the contrast.
Yeah, it's very clear if you look at the I think we cover this in our newsletter chart side by side, you can absolutely see the flip. And I think Solana flipped Ethereum for developers, new developer activity most recently.
So what are your thoughts on the meme pump? Do you think it will persist? Is Ethereum losing out, or could things change? Oh, you go for it.
So there is the meme supercycle theory. I'm not in that camp at all. Eyeballs and attention is everything with crypto. To a large extent, crypto is this massive pool of funds, and it's all. We are getting a lot of new funds into the world this year with the Loomis Act in the US and all the strategic Bitcoin reserves coming in. But for a long time, it's just been the same money just moving around. And the reason, like you mentioned, pump.fun. I mean, there was a point where there was 50,000 to 200,000 new cryptos being created per day on Pump Fun. You could literally spin out a coin on Pump Fun in under 5 minutes. And because of that, obviously, Solana's gone nuts. So.
Yeah, I would say the kind of pump action, I don't really like, but the same with over leverage in the system as well. It kind of distracts from all the good things that are also going on. But generally speaking, I don't have a problem with meme coins if they provide some sort of value. And I think value can come in many forms.
Isn't that the antithesis of a meme coin?
No, not at all. It depends. It's total utility, right? Every person has a different utility function. And if you get some pleasure from using something, in many cases, it's about community. And that's what the crypto world is also about. So you can create community around a meme coin. People get enjoyment from it. Does it have true lasting value? Probably not. But it's got the same as, if I go on holiday and I buy like a £5 poster and I put it on my wall that reminds me of my holiday, it's probably got some value to me, but not to the next person.
Yeah, I guess that's the point. It might have utility for one person, but not another.
Yeah, right? But you have a lot of £5 posters getting printed though. so I mean, like, there may be huge volumes, but the kind of single coin, like pump for a second, that's not a good thing for the industry.
Thank you for those thoughts. Coming away from the meme pumps, are there any other viable staking or yielding opportunities in crypto other than the big names like ETH and Sol?
Yeah, sure. So for a bit of context, I have a sort of a macro top-down picture. And with staking and yield farming, what we have seen every cycle is that you really only want to stake and do yield farming during bull markets, because you don't want to be doing that in the bear market, because you're getting if you're staking, you're getting a token of a certain asset, but the value of that is dwindling. Now, with crypto, again, just analyzing all of the different cycles, it's very narrative driven. So every cycle has its main narrative. So personally, for me, or if you go to 2013, it was all about Bitcoin and Bitcoin copycats. That was the narrative. 2017, it was layer ones. Ethereum came out with smart contracts. And you also had these sub-narratives. So DeFi was teeny-weeny in 2017. 2021, that small DeFi narrative became a big narrative. So you had sort of, again, ETH killers and DeFi. And in my personal opinion, 2025, this is undoubtedly going to be an AI cycle. Absolutely. So you have the main AI cycle narrative, and I guess the cherry on top of the AI cycle will be agents, so autonomous AI agents, and that, a sector of that will go nuts. And I think the sub-narrative will be a little bit of gaming, a bit of real-world asset tokenization, but RWA is going to be the next cycle. So for me, if I'm looking for yielding activities or whatnot, I am solely only looking for AI-related staking opportunities or yield farming. And there are a few out there. So I don't know if you heard of BitTensor. It's basically, people flocked to Bitcoin because they didn't like the central banks. If you don't like OpenAI, BitTensor is your thing. So, but there are many others out there. But also the main thing is that you have to dance on the dance floor, but dance close to the door, because you don't want to be doing this during the bear market. So personally, I'm full sidestepping Q4, or at least a couple of months after the Federal Reserve starts printing like nuts.
Great. You've said before, don't let the yield tail wag the portfolio dog. What do you mean by that?
I guess just like that. So a lot of people are obsessed with, what is the highest APR or the APY? And was anyone here in the audience back in the rebasing DAOs in 2021? Does anyone remember that? Okay, so they were the trenches of the last cycle. So we had these rebates. So it was like the cherry on top of the DeFi cake. You had these protocols offering like 800,000 to, sometimes 5 million% APR. Oh, so APY. And so everyone was just go, oh, yield. But obviously these were Ponzi-nomics. A lot of these, it was all about the pump and the dump. It was literally pumping, crazy yield, you all got trashed. And so people are obsessed with yield. But I think you have to have a much bigger context. You need to look at, for me, look for yield in the growing waves, i.e. the hype cycles. For me, it's just AI. I know you guys have different
But
takes.
it's important to flag to bring this back to the point we discussed at the beginning. Those are not staking opportunities, right? Those are yield opportunities. Sure. And so they're different, and there's a different risk profile. And I agree with you about the risk profile of those. I would also add, though, that from a staking perspective, I would also stake my assets during a bear market. It is hedging against price risk. If you hold assets, unless you have a different risk profile and you're comfortable to lend out those assets or to participate in DeFi pools. If you simply stake an asset you were going to hold anyway, you are helping to hedge against the price risks. So I would say stake even, and especially in a bear market.
Depends on your epoch, your portfolio epoch, really.
Yes, it depends on your liquidity needs, yes, of course.
Yeah, I would say that most crypto investors, they don't need that kind of intraday or daily liquidity, right?
Yeah.
Like the vast majority. So I completely agree. You're leaving money on the table if you're not doing it, and you're not contributing as well to the industry.
Last question before potentially we take some questions from the audience. Any last takeaways or bits of alpha that you want to share with the audience on yield, staking, anything?
I'm particularly excited this year about Bitcoin staking. Now, I know that doesn't quite sound like two words that should be in the same sentence, but we are seeing a lot of interest around Babylon, in particular, stacks and core, and various options for, which is a little bit more correct to say yield in this context, on Bitcoin, and how you can stake your BTC and receive rewards from the Babylon Foundation, from the network there. There will be some that are the Bitcoin purists who maybe this might not be quite up their street, but I think as an industry, and given that Bitcoin holders are long-term holders for the most part anyway, I think it's quite exciting to see the developments there, and I am very interested to see how that portion of the yield ecosystem grows and develops this year.
Well, I don't give investment advice, obviously, but look, it's going to sound dull now, given we spent a lot of time talking about it. I still think Solana is super interesting. I mean, we've got I mentioned our new product. We have still have the largest, not just the largest Solana product in Europe, that's the largest ETP in Europe. Actually, is our Solana, our original Solana ETP. But if I have to pick something that's really, maybe it's a bit kind of lower probability. I think maybe like Uniswap and the opportunities there. If it can pass the returns down to holders, I think that could be a really, really neat opportunity.
For me, I like seeing where the flows go. So the last cycle was, a retail-driven market. We hit about $3 and a bit trillion, and I think it's fair to say that this cycle we is likely to see anywhere between 5 to 15 trillion. So we've got multiple trillions flowing into the market. Now, if you look at, again, every cycle and the cycle narrative, you'll hear me say narratives a lot, there's normally the top 2 or 3 coins or projects within each narrative, they suck up 2 to 4% of total crypto market cap. I was saying this last night, like in 2021, it was all about the ETH killers, right? And Cardano, they went from 0 to a $94 billion market cap and 4.2% of total crypto market cap with zero ecosystem, and it's just pure hypeware. And so in every cycle, so for me, again, going back to the AI narrative, I'm looking for the ecosystem creators, the virgin landscape creators, the top 2 or 3 AI projects, because they will suck up 2 to 4% of total crypto market cap. So if we have a nice tailwind and we get a $12 trillion market cap and an average AI project gets, say, 2% of total market cap, just divide that by the circulating supply, by Q4 this year, and then you'll get some interesting numbers.
Great, thank you. So we have a little less than 5 minutes if there are any pressing questions. Otherwise, I will give the time back to the conference. So any questions from the audience?
Yeah, hi everybody. Thanks for discussion. So my question is, I would assume that institutional players are afraid of slashing when it comes to the staking, right? To the staking rewards. What do you think market could offer them?
So slashing only exists on some networks. So there is no slashing on Solana, for instance. But yes, it's very much a concern for large institutions who are looking to stake ETH. And to be honest, that's why they come to us, because staking is complex and there are risks. So if they were to run staking themselves, there would be an increased risk that they would be slashed. We have 130, almost 40 people now globally running staking for over 700 institutional clients. So it's a lot for a team to go off and hire 140 people to run their ETH staking, and they have to have the expertise to do so. So that's a reason, the risk around slashing is a reason why firms like that come to Figment. And there is also some insurance options in the market, and the insurance market around staking is slowly and developing and evolving, and we're working with the likes of Aon and Nexus Mutual around that. So we have an exceptional head of risk and coverage at Figment who has been helping to educate the insurance industry about staking and what the risks are so they can provide the necessary coverage. So I think that's another area where we'll see growth and development as the industry matures and the insurance industry has a better understanding of what the risks are when it comes to staking, especially for Ethereum.
Any other questions? Great, thank you. You've been a lovely audience. Please help me in thanking our panelists for the discussion.